Hi, welcome to the first one of these videos. I'm going to just try and walk through some of the activities, implications that are going on in the crude vol space. Walk through a few things that I'm seeing. Hopefully, give some context to what's going on out there. So, they're not going to be kind of day trade activities. Most people will switch off to that, and they're certainly not going to be anything looking at order flow. In fact, some of the areas might kind of detract people from seeing the importance of volume, certainly in the volatility space. Okay, so obviously, crude over the last 2 months has basically ended up exactly where it started, early September. High 60s after the rally up to nearly $77. But I think an interesting thing to look at is the pace of the roll over the last few months. What you can see here is the roll pace of September and of the 2017 NOV going into DEC and 2016 NOV going into DEC, and obviously 2018 NOV going into DEC here. So you can see that the purple line and the green line, but we had quite an expedited move into December. This is the average pace of roll, the min max usually, but you can see there was a considerably faster percentage of the roll done much quicker, and that was up on the highs. If you assume we're rolling mid-month to mid-month in the futures contract, a considerable amount was already done, way ahead of the norms. And this data goes back by quick strike for 10 years, and that was really kind of, you could argue, representative of what happened in the risk reversal. So if I move this to front month, so if we look down at the bottom here, this is the future. This is the front month roll to roll. You can see the rally we had in July where we spiked up to the this was around the Iran sanctions. It was quite a sharp move up to that previous. I think the front month at the time was circa 75, something like that, 75.50. I think we made the high up to. But you can see the risk reversal here just rocketed from being, usually, as always, is puts our bid over in crude by usually between kind of 1.5% 2.5%. But you can see we actually went calls bid over all the way up to a total of 2.6%. And you can see it in this rally here that we had throughout the whole of September, even though the pace of that rally increased dramatically towards the end of September into October, when we touched after the build then of one day that quickly moved to a large short cover. I think we're up to the high of 76.80 odd. The actual risk reversal barely touched above zero. It's quite a telling marker that you've also got hold on, where are we here? You've got this ties in exactly with this pace of roll, so they're actively selling that front month. Generally, kind of most people have been sitting long crude, selling that front month into where are we here? Into also not getting too excited into those risk reversals, which was, I think, it's quite an interesting play, is that we were all the way on $2.50 higher than the previous high, and had barely got above break even for the risk reversal. Anyway, so I digress. I think one of the things to kind of walk through is that the volatility in crude has been fairly stable now for a kind of prolonged period of time. If we go back to just at the money vol on the front month. So this chart's just representing what the front month at the money is over the last 9 months. If we move it out to a year, the usual Christmas dip you can see there in the front month, where activity dries up, but then predominantly just been sitting in a kind of 22-28% range in the front month. And that's it. We've since we moved up from the 40s, I think when vol was sitting kind of low 30%, we've just been sitting in this range for a prolonged period of time now. And you could argue for vol traders, it's just been a case of every spike we see above that 26-27%, people have been selling into it and collecting quite nicely off the back of that. But you can see intraday there's still plenty of opportunity. This chart here represents the last 5 days. The green line that you can see here is the futures price, and the blue and the orange line here representing what's going on intraday. Each of these markers is taking a reading every 15 minutes and publishing the front 2 months vol. So this is December vol and January vol. Kind of now with only 18 days left in the December contract, there's not much Vega left in it, and most people are out of that. But I've shown it on there because it is moving the most. And the risk reversal down the bottom here is now kind of slowly, after coming back in, puts bid over all the way to 3.5%. It's slowly moving back now as the futures price. You can just see here, the green line underneath futures dipping. Slowly, the risk reversal will come down as the puts get favoured over. And the last few days, we've kind of rallied back up, and that puts bid over is dissipated somewhat. And that's representative here in the skew as well. So this is the vol by strike skew of each month. If I actually do that, and then add on constant maturities here, yeah, that will do. You can see where we are representative of the last 10 years as a constant maturity, which is a good thing to see as to kind of value over or not. So if we look, if we look at the 60-day and the Jan, actually let's take these other two off because it's just going to get confusing. Sorry. Oh, I think I must have pressed it. Sorry about that. Okay. You can see we're not far off, 60-day constant volatility skew to where we are, probably slightly higher, but I think there's probably a date mismatch. There you go. Look, we've got 67 days. Sorry, we have 48 days on the Jan against a 60-day rolling, so you're going to find that's just slightly higher, but overall there's nothing kind of strangely down. So if we where was I going to go to? So I think interesting fact that's happened in the last few weeks is we've moved slightly to a contango state in the front months. So you can see now contango looks to be right the way out to I think it's even SEP. Yeah. Looks like we're at contango out to September 2019. You can see that curve there where it's just slightly increased. It's very, very flat, but it is depicting a strangely a strangely negative picture for crude in that sense.